Good morning, everyone. I hope you guys are well and you all enjoy that big push up overnight or yesterday into the night. All right. Good morning. Let me know if you guys can hear me okay. Give me, I don't know, just a Y. Just type in Y if you can hear me all right. Okay, there's one person that can hear me. Good. And another asking for Discord link. Let's go there. Hold on. Huh? I'm going to start in a bit. I don't know, it doesn't want to give me my Discord link for whatever reason that is. Yes, I'll pin that in the chat. I just don't know why it's not working, but give me a second here. Okay, got it pinned, so that's fine. All right, cool. Let's have a look. What is happening? Let's go to the charts. So let's go to the daily first quickly to show you guys. All right, so we've seen this. Obviously, I had all these levels plugged out here, and the big thing for me was this liquidity high. That was like a protected high to me for price going down. I thought we should go to this equal highs up here, and then maybe reverse from there. But obviously, we all knew that there was going to be something with Iran last night, and that sent price through everything. So I'm going to take all this off because there's no relevance. I'm going to leave this here. Just going to take all of this is clear now. So we've got equal highs up here. Equal highs. And I said and this is equal highs up here as well. And that's obviously the all-time highs. So obviously it's FOMC day today, so I don't know how much trading we will do, but see how we're holding that equal highs, not pushing up. So maybe we want to come down, maybe do some sort of a pullback. Looking at, hold on, before we go there, just want to see, this is a liquidity run here. Just want to mark it out, then we know. Liquidity run there, and this is the break in structure. That swing point there is my anchor. All right, so this fair value gap here, with this little gap, Just want to show you guys it lines up with 50% of the fair value gap. So yeah, we could see some sort of a pull down into this and then maybe a bounce from there. So okay, so 15 minutes we seeing short. Let's see 1 minute. All right. Breaking structure here. Okay, so if anybody is taking a short today, I mean, one, I'll be careful. But two, if I want to take a short, it's got to be at least around this area. Around there. The only reason I would look at that is because of this liquidity that was raided here. Nice big reaction and a pullback immediately. Breaking structure here. Don't know why it's not sell one. I don't know what's going on here. Why it's not. What be as it may, let's. I don't know. Maybe there's something wrong with. All right, so let's see. We can go back here. I mean, this all, guys. All of this is liquidity. All these swing lows. That's all liquidity to go down to this bigger fair value gap. So there's a lot going on here. I mean, we're printing equal lows as we speak. Right here. As we speak. Okay, so let's take one off here. Just want to enter one there. Something's up with this trading view today. I mean, the reason I'm taking it or setting it at 50% here, obviously I want to enter above there, but there's no fair value gap here. So for me, there's a fair value gap here. I'm not going to enter here because we saw yesterday enter in the fair value gap, but it's not at the 50%. So I would like to see some momentum, maybe pin into that before we drop down. Right, while that's going, let's see, there's obviously equal lows down here. These are all equal lows, so I'm going to mark out this level here. This one here. Sorry, pop around till we get it right. So obviously I'm not advising any trading because anything can happen here. FOMC tonight or today. See spiking through that now. That's your protected high up there. Okay, so I'm going to take this one off. I mean, I would like to see price turn around here, maybe go higher and then come down. But yeah, so I wanted to close below that swing point in order to get me that 50%. Come on. Let's get our pointers out here. That one and this one. We need to close through here, then that will probably become protected. Let's see. I'm not very eager to take any trades today, guys. Just because of everything that's happening now. It's FOMC. I normally don't trade on a AM session before AMC, FOMC. So these trades that we're going to take here, it's purely going to be for, you know, education. So that's now protected high there. Break structure here. So I don't know if we're going to go up there. Again, there's no fair value gaps here. The only fair value gap is this one here. That one. And what I wanted to see, so obviously there must be a big gap, big overnight gap, and we've got this big fair value gap. So if we're gonna work out 50% of this, it's in the top quarter of this fair value gap. So just something to take note. I don't think it's good to take a trade down here. You could be lucky, but there's definitely, if we get up here, would be great. But don't know if we're going to see it. That's 30, 31. Sorry, I just want to see something quick. Okay, that is the first fair value gap. Alright, so this is the first presented fair value gap. This one here, it's purple. So I'll call it first fair value gap so everybody knows what I'm talking about. So we set it up, we tested, we ran. So yeah, still not a good place for me. I would like to have seen price go high up first. Maybe we get this retest here. Let's see if we get it. Because this is now the new low here. I'd like to see it back into this blue block up there. Don't actually know if you're going to go all the way there. Looks like momentum is heavily pushing down now. And I don't like just shorting here because of whatever reason. These are nice equal highs up here, there. This one here, this trap people long, so there's definitely opportunity above that. I'm not saying it's going to be now, but definitely at some point. I'll say 4 hours. Yeah, so it all lines up there. Yeah. See if we can get into this little blue block. And that blue block is above 50, so it's fine. I thought it was going to be, that's fine. Guys, don't forget to like and subscribe this video. It helps me with YouTube. All right, so let's see if this consolidation here is obviously, that's the new swing, is that one there. I'm not interested in taking any shorts down here unless I get some sort of value higher up, like in here. If it doesn't gonna give me anything, then so be it. I'm just gonna we'll just call out price and just tag along. Okay, let's see if we can get something up here now. Let's see. All right, so I'm in that trade, and I mean, we're gonna try to manage this thing down. Now that I'm in it, see if I can find something. Okay, let's see. Sorry, I'm just gonna minimize here quickly so we could actually try for something like here. This thing can actually go all the way down here, so we'll play it by ear. We'll see how it play out. So we'll just obviously manage these trades. It could quite easily go and stop me out, but I need to see price move down. Yeah. Let's see if we can get this inverse here on this Beverly gap. Okay, so fair value gap right here, but a sticky place. Not the ideal place. Don't like it when price is stuck like this between two fair value gaps. We entered on that one. Now what we want to see is price actually close and break structure here. Not go and break structure there. If we break structure there, I'm just closing the trade because then it's not worth anything. Did anybody hit some nice trades yesterday with that big move up? Right, you want to see inverse here and then slice through there. Let's keep this tight, just in case. Right at 50% of that fair value gap. Let's see if we can break through there. Right, looking good. Let's see if we can close nicely and strong below that. Okay, looking good. I wanted to clean that and close like that. No pullbacks, because then I can reduce my risk here. Right, so we broke structure there, and I am going to reduce my risk to about $200, and then we see how it plays out. See if we're not going to bounce here and run all of that. Let's see if we can continue the momentum down. Alright, so we've got a new fair value gap here. Now we want this to hold price down. And then we've got this one is a IFEG. Right, so we want to see price go through that low now. And the protected low high is up here. Like I said, guys, this is in FOMC, so I'm not gonna expect like big home runs today. We can get it. I mean, this could really drop here if it wants, or it can chop around. And what I mean by that, this can turn around, stop people out, run up there, come back down, all of that stuff. The only reason I took this trade is we had these little highs been swept aggressively and break of structure aggressively down. We didn't get that pullback into that range, but this is the first presented fair value gap. We marked out this new fair value gap and we said if price gets there, I'm going to try, take the trade because of liquidity lower down. And we got it. We have a tight stop here. And if we close below a year, I'll definitely go to break even here. Okay, so for price to go up here, there's a IFG and a fair value gap. So there's a thick line in the sand here. And I'm going to take these off. But I mean, we're at liquidity. Liquidity can bounce price around. So this is what it is. $20.95. So one thing I can tell you guys, when you see a push like this, I can tell you statistically you can go back, push down like this, enter the bottom of that push, break. It's never a good place. Rather wait for a pullback up higher. We didn't enter down here. We waited for that to go back. And that's a discipline you're going to install in yourself to get good entries. And it's like a business. You need to obviously buy everything as cheap as you can and sell it for its most expensive price as you can. And never go for the average. Because this thing could quite easily turn around. So we've got consolidation, manipulation, could spike in here and then expand. Or it can just drop. But theoretically, when price goes sideways like this, there's definitely some sort of manipulation if you were bullish, or the manipulation could be down and then reverse. Okay, so those who trade the ARB strategy, that's the high. This is the low here. So price is literally broken through the low and now it's consolidating on that low. The 50% is right up here. So if you enter here, you would put your stop here. If you enter up here, you would put your stop up there. So I'm just saying, for those who's trading that, that's where we are. Alright, so now we see some momentum going down. And then we stop. I hope this is not the manipulation to push higher. Yeah? Can actually bring this in a bit on 40. Okay. So just on that entry, I mean, we saw this nice push down here. I missed the entry here because my entry was up here. It ran away without me. You shouldn't, fall in that trap of FOMO to try to just get in. Just wait for the next opportunity. I promise you, all these pushes lower, pull back, push low. This will eventually come back in here and then drop if it wants to go down. See, it's right in this fair value gap. So now it's forming equal highs here. So if you really want, I mean, I could do this, sell another one here, and then move this to break even. Okay. That's the new breaker structure. If you want to see price follow through on. Little equal highs there. So consolidating, forming equal highs, that tells me we want to spike in there before we decide to go down further. I mean, if I really want, I could just collapse the trade here and take money off that $1,000, 1,200, 1,300. But I do think hopefully I get my second entry and then we move lower. So our price is stuck now. This is where the chop starts. All right, guys. So obviously, PM session. We'll trade the PM session today. Well, I'll be live for it. Don't know if we're going to trade anything because that's when FOMC will be. Yeah. So if you want to come hang around and maybe comment with me on price action, that's more than welcome to come and join. If you go to my YouTube channel, you can subscribe to the notifications. I've already set a reminder out. So, and if you're in my Discord, I also post there when we go live. Okay, so now let's see if we're going to get picked up on these equal highs. So this momentum that started going down completely stopped here. Like I said, this is where the chopkin starts and just go sideways. Hope you're doing right. No, so this account that I've got here that I'm sharing with you guys, this is just a paper trade account. And I'm not trading any real money here because FOMC week for me is a pretty flat week in my real account statistically and my history. So, I mean, yeah, I hope that answers your question. But the entries and the price action stays the same for a real account. Stays exactly the same. So the only reason I'm on the mini account here, it's because I'm on a contract, the ongoing contract. Yesterday I traded on the expiry contract on the micros, and what I'll do going forward, I'll get a funded account and I'll trade it live. I'll use that, and yeah, and then we can track the progress and all of that. The only problem is I'm in South Africa and I don't have the luxury of all these prop firms, futures prop firms like Apex and all those nice ones. If I'm trading a prop firm, I need to go through a CFD. There are some prop firms, but there's limited, of money that they will pay out. So you can't go into a live account. It's all a bunch of rules. So I would most probably do a FTMO account. And I'll show you guys, you can take a small account and you can take it to a much bigger account very quickly if you trade it right. If I say quickly, I'm not saying in a week. I mean, you can do well. Okay, so now it looks like it wants to continue. Okay, so while we're looking at this, guys, I'm going to take this one off. But I want you guys to focus on what we did yesterday. I a high, a high. That's liquidity. There's equal highs. If we keep going down, it's going to come a time again where price could aggressively run all these liquidity pools. So just be careful. All right, where should I put my take profit here? Okay, this was the low that I looked at earlier. So, but then, just yeah, I think what I'm going to do is we'll trail it and see. Because this now I think is equal lows, is it not? Also, this is fairly. I can use this one here. It's new equal lows. So this could come up here and then drop down. This is obviously a new. And then obviously we want to see how price. Are we going to spike through this or are we going to close through it? This could quite easily go all the way up here, run all this liquidity and then come down. So we broke through this. I'm not moving this down here because we haven't run liquidity there yet. Okay, so let's look at this quick. If we take this high to this low and we measure it from there to there, 78 points. So I'm actually gonna gosh, I'll grab this, put it up there. That's 78 points. Only reason I did that, I took 50% of the or the first 15 minutes. That's 78 points, and I just took it from the bottom like a 1-to-1. If someone would have entered down here, they would try to take a 1-to-1 profit. But I'm not taking 1-to-1 here. I'm already in the trade. Our stop was here. It was $500, and we don't have any risk now. So if we get stopped out now, it's fine. And if we drop through this, that's also good. Good for us. Don't forget, for those who haven't yet liked this video, the stream, it helps. Give me a thumbs up. Okay, so someone got out of the first trade. Is it because of you took profit or 25,106? 25,106 is this equal highs. Yeah, it's a good place. Come on. Give us something. It's always better to do the right thing. Remember, guys, trading at the end of the day is not about the profits. I mean, I can put this thing wherever I want. When you enter a trade, you want to get the best entry possible, and then you need to have the best system that works for you to manage that trade. So even if you say I want to make $1,000, again, it's not about the money, and $1,000 is here, and you take $1,000 and this thing falls so far that you could have made $6,000. That's what you miss out on. I'm not saying you have to hit for home runs. I'm saying the way I trade is I'll get in on a trade. If I get stopped out, so be it, and I'll just wait for another one. If I get in, I'll obviously make sure I see, like here, we broke structure, and I moved my stop, close here. So now we're wandering around here. I move it to break even. If I'm wrong, if price turns around and stop me out, that's fine. I'm not losing money. If I put my left my stop up there and it goes higher and stops me out, I'm down $500. My next trade, I need to trade to make $500 back first. And that's where people start chasing. The best thing is focus on managing, focusing getting the right entry, and then focus on 90% of my job is to focus on managing my trade. Nothing to manage here. I manage it to break even, and that's it. If it breaks through here, that's fine. I'll happy to take that. It might go lower. I'm not feeling it to manage a trade lower today. And the reason being it's because it's FOMC. If you stick around for future live streams, you'll see, and even those who's been with me for the last week or so, I'll show you guys how I manage my trade. I take my entry and then I just manage it, and I'll have a ultimate goal. If it gets there, then great. If it doesn't, I'll manage it in between. And I'm not managing it over aggressively. I'm managing it to sensible points. So when we broke structure here, that was a protected high there. So if I entered here, my stop would have gone there. That's it. And I would have been in the money, pull back, break structure. Then that's the new protected low. Price went down, came back. People get nervous here, and then we broke. That's your new break. Now you pass your entry. You in profit now. And sometimes, and people don't understand this, but sometimes when you're wrong and you in profit slightly for say $100, and you get stopped out for $100. I mean, you got stopped out for a positive $100 on a trade that were wrong before it got to your target. If you're right, you get to your target. That's good. But if you're just going to leave your stops up here, enter there, and let price come all the way down here, turn around and stop you out for a full position, I mean, in my mind, it doesn't work for me. Because I've seen the market turn on a dime and go back and then take you out. Okay, so Okay, so we want to see price close below this area, not pin through it. Because then I think we're going to see this price action for a while. This low got pinned through. This low, new low, got pinned through. So it gradually goes down, but it keeps pinning through. So it doesn't close through for you to actually bring your stop lower. I mean, today, this movement here is tiny. There's other days where these are like 50, 100 points move all the way up and down, and people are getting cleaned up through that. Right, so now we're turning around. There's a little fair value gap there. Guys, I'm not analyzing the charts on a 1 minute. You got to keep an eye on the bigger time frames. And, you know, I go daily, weekly, 4 hourly, hourly, and down to 15 minutes. And then I look to, look to enter on a 1 minute or 5 minutes. We'll go to a 15-minute quick. I'll have a look here. Right. The thing is, with this 15-minute, if this forms a swing point here, then we could see a pullback. And the pullback could be very close to my break even. See there. So I've got two choices now. See how this finish, and then maybe just take the trade off. And yeah, so we've got some time. So let's see if this wants to do something else. So, and I think that's going to be it for me. I'm going to wait and see how this 15-minute close. And hopefully we still down here when that happens. So anyways, it was good to just keep an eye on it. There's nothing to trade here, guys. Absolutely nothing. Let's see if we can get down here. Okay. Still stuck there, but we still got this liquidity here. Guys, just a word of caution. So obviously this channel is not financial advice of any sort. It's purely education. I would never ask you guys to take any trades. And if you do, it's on at own risk and all of that, your own discretion. Come on, give us something. See what the hourly looks like. Very tempted just to take the trade off, yeah. Which I think I'm going to do anyways. Just put it there. Don't like what's happening here. So I'd rather play it safe. Guys, is there anything you guys want me to go through on the live market, explain something that someone's not familiar with? Let me know. I mean, liquidity is right there. So normally what price would do is spike through it. But liquidity there, no intention of running there quickly. I just want to go to this 1 hour. I want to show you guys something. So I'm going to take all this stuff off. If this 1 hour, so we broke structure here, right? And we're right here. Where do you guys think price will go next? Price might want to go into this fair value gap. So a pullback in here before it sells off. There's liquidity or gaps there. It might just drop in there, but I think what would happen is because of that break of structure here, let's see, from there to there, right here, price could turn around or pull back into test to go down. So just keep that in mind, that price could turn around here because that's a swing point to come all the way back up. I did say I'm going to close this thing. I give it another minute, and then I'm probably just going to collapse the trade because of that swing point that's forming here. This is also, these lower highs also forming liquidity. So the sensible thing is to go here and then pull back, but okay, I'm taking 2,000 off the table. Just in case, boom, something like that happens. I don't want to sit with a break-even trade up here. Might slice through, then good. People might say I missed out, but it's fine. So people might ask me, so why am I closing? It's a paper trade account. The thing is, even if it's a demo account, you got to treat it like real money. See, now we're going through there. Got to treat it as real money, because if you install the wrong behavior on a demo account, you're going to do the same on your live account. So always keep that in mind. Right, so also, this is still the protected levels. See, that goes in line with that equal highs there. That protected high down to there. Okay, and there's the liquidity grab. And that's the new structure start forming there. Just want to do this quickly. Take a picture. Okay. Good for those who took the trade. Hopefully you learned something from it, not just taking trades. So whenever I on the stream, or even when I explain to people when I take trades, I will never just take a random trade and see how it goes and then obviously go back and say how great it was. For me, it's important for anybody who explains or take a trade to tell me, even when I see you guys say on the chat, you've taken a trade, you've entered, and all of that. I will go and look at where you entered. And if you entered down here, I'm not going to say it's a wrong trade. I mean, this thing can drop. You can make a ton of money. But you got to think wisely when you take a trade. Where's the right place to enter if you've got a target and all of that. Like these equal highs is a perfect place to enter. Price is not getting there, so don't get anxious about it. It's just the way price works. I mean, some days It's going to give you perfect entries, and we're going to drop and all of that. Other days, I mean, you cannot expect perfect price action today. It's FOMC. So the fact that we actually took a trade here and made money, I must say, I said to you guys in the beginning, I normally break even or lose money on FOMC weeks. I mean, this week on FOMC, we made $17,500. And I didn't over leverage, and I didn't put stop losses out of drawdown of thousands. I think the biggest drawdown we had was like $1,000. And then it's my stops. That's where I get stopped out. So that's what's important for me, and hopefully I can show you guys how important it is for yourself to trade successfully. So remember what I said earlier. There's a swing point spike through, swing point spike through, swing point spike through, and we're spiking through, but we're moving slowly down. Now with all this movement down, I promise you, just go mark out all these swing points, all of this. This is all liquidity, and we saw it yesterday. Still think I've got it. I can show you guys. Just want to show you guys what we marked out yesterday. So this is what we had yesterday. We equal highs, swing point, equal highs, nothing happened, through equal lows. This was the area we said we should see a bounce. We did see the bounce. There was the entry, and then we went straight up. Didn't get there, pull back, and then we went through it. So you gotta learn, these things, and know how to spot them, mark them out, and see how market actually reacts around it. See, here's another one. Spike through, and then, so there's no follow through close. So there's no momentum to the downside. Slowly but surely. Check in the chat. Is there anybody trading ARB strategy? See, at this point, I would be careful taking a trade here now. Because the lower this goes, the higher the equilibrium. No, it's not. It's coming lower, so that's fine. Sorry. I don't know what I was thinking there. So from there down to there, it depends on how we close here on the hour. Pull back could fill this whole gap before we go down. And if you fill that whole gap, that's probably about, to this first fair value gap around there. Yeah. FOMC, there's no perfect play for FOMC. FOMC, especially with the war and all of that, I do think we'll probably get I would personally just sit and wait for price to pull back and then look for a nice long. And I think the best part about NASDAQ, if we move out of the seasonal, downside and start trending again, trading is going to be awfully easy for any new person starting trading, because every time you buy, it just goes higher and higher. So you just have to stick around and you'll make money. It's when the market on a higher time frame market daily goes into that consolidation. And if you really think about it, well, let's go to the other one. Is this the one? Just want to take all this off and show you guys what I mean. All right, so this consolidation has been going on for for a long time. This one here starts in December, same thing, same consolidation. This starts October, earlier, but this is a smaller version of this. And then there's a pullback into these equal lows there, and there's some equal lows down here. Yes. So I don't know if we're going to go all the way. But after this consolidation, it was pulled back deeply. And then it obviously changed with the tariffs. This was last year, this time, with the tariffs. And then it all worked its way up again. Now this whole push up here, people make money. People don't like these consolidations. Now, there was a strong move down. Here was consolidation, shallow moves down. So it's like choppy moves down. And I need to see how this candle closed today. If it closed solidly higher up, okay, then I think we're going to go for new highs. Then I don't know if this, it's weird that such a shallow pullback. But it's fine, and then we're going to go for higher highs. And we'll make money. We'll definitely make money. Well, I will make money. If you manage your risk, then it's easy to hit a 1 to 20, 1 to 10, 1 to 30 risk reward trades. And you guys might laugh about it now, but I'm going to show you. You don't have to trade every day. You can actually sit and wait for those trades. If price action is better, you'll have 1 or 2 good trades once a month, and you can make easy 20-30%, no stress. The only problem is then if you get a trade that runs over a few days, I don't think you can do it on your prop accounts. Then it becomes more lucrative to trade personal accounts, real money. Okay, so we've got 15 minutes left for the hour to be finished. Just mark out that gap, because in 15 minutes I'm going to end the stream. Then I'll see you guys back at the PM session. But if you're going to continue trading, just be mindful of that gap, that fair value gap on the hourly. Price could pull back into that first and then go lower again. I don't know if any of you guys keep a journal of your trades. If you do, so what I've done is when things start changing around. So I never used to manage my stops like this. I obviously read some books, because obviously if you get the entry right, you get the direction right, you got the liquidity right, and you enter and you still get stopped out, you think to yourself, what in the world is going on here? And you continuously had a fight for break even. And I thought, geez, I need to do some research to find out what can I do. I mean, I've done ICT stuff, so he's explaining in much detail how to do it. But I can tell you guys, I've done the ICT thing. I'm trading ICT, so by the way, and it's not just ICT. I'm trading. So I had some other mentors as well. And from ICT, I picked very specific things that I can see in a live market that works for me, and that's what I'm trading. Yeah. But my biggest challenge was managing risk. So then I read the book of, gosh, I keep forgetting the guy's name. The Best Loser Wins. Hugard is the guy. And he doesn't break it down like this in his book or something, but he had a live stream and stuff like that. So he then started trailing his stop, and I was like, what the hell is this guy doing? And he explained, but he did it differently. He did it on a 10-minute or something like that. So he trailed it on a 10-minute candle. If let's see, 10-minute candle. Let's see if this would work. If you entered on this candle, your stop goes above there. If this candle closed below that down candle, your stop goes there. If this one goes lower, your stop goes above every high of every 10-minute candle. So in this case, it would have worked perfectly. And I then thought to myself, geez, if this works this well, how do I prevent it from getting stopped out if 10 minutes was at these equal highs? And then I start obviously going through the ICT swing points, and when does it become a protected swing point? Is when price obviously break lower and close below it. that tells me we want to make lower lows and lower highs. And that's the basis. I then start doing it. I tested it. It worked very well for me. And that's where I got stuck into managing my risk like this. Now, obviously, in this price action here, there's so many swing points. You got to also use your discretion to say, all right, so that was an important swing point. This was a swing point, but I also know, because this is not at 50%, there is a very good chance that price could run that high, create a new swing point, and then sell off. That's why I wasn't comfortable taking a trade here. I was happy to take it here because we broke structure here. So that becomes a protected swing point. So I can then take my trade here. If there wasn't, then we've seen it in this last couple of weeks, how many times it get run and then drop from there. So, and here it's just a mess. We know there's equal highs here. That's why I haven't put my protected high anywhere here, because I'm sorry, we need to run these equal highs first and then shift away. And it's important, if a high forms, that the shift away from it is aggressive. Like there's that move there is aggressive. That's why it's protected. This big black candles, it doesn't look like much, but that compared to that, it is aggressive. It's all black candles. But then there's an aggressive move back. And this is where people get nervous and think, oh, we're going to run this high now. And then it turns around. So understanding that whole concept, I promise you, and we can do a live stream one day where we can pick the direction. We don't have to know where liquidity is. We just pick a direction and see if we can trade in that direction, managing the trade, if you can make money. Alrighty, let's see what this wants to do. Even on a 1 hour, it's all small, 15 minutes, small candles going down. If this closed below this breaker structure, I could move this to make this a protected high, but all of this sits above it for later. And we're probably going to see this for FOMC. That's going to send price through the roof or something. I don't know. Or maybe this whole move overnight is what was worked in or calculated in for FOMC, and then nothing happens at FOMC. See, price is drifting down to this fair value gap that we marked out. This is where we said before the stream where price should probably sell to. I mean, I could have, I think my trade would have been, what, 4,000 or something down here. But, so this could be a protected high now. But, you know, with the risk that we could see a bounce. But we might see the bounce only when we get down here. there's a fair value gap, so price should, I mean, if you really want to do a short, this is probably where you would enter a short. I'm not saying you should, I'm not doing it. Only reason I'm taking this is because we broke structure, a nice momentum down test, and I can show you that's in the 50%. Yep, right at 50%. And but if you enter there, now your aim is for this black candle to slice through this breaker structure and close there. Then it's fine, like that. Yep, that's a good move. Remember now, you've entered here at the beginning of this fair value gap. This move here, your stop go to break even like immediately. Because if this black candle pins back up there, it could turn around. And if it closes like that, it shouldn't come back there. And you don't want to be in a trade up here when it turns around. You'd rather be at break even if it turns around. But it's nice to be at break even, and see, that's perfect. That's your protected high breaker structure. Your risk is zero. You're already at 221 plus, and I mean, this is easily, let's see, you have short up there, put your stop there. I mean, that's a 5. You can get 6 to 1. There's already a 4. And you only need one trade like this a day, guys. Only one to make money. You don't need to hold it for, try to do whatever. I mean, this is people buying Lamborghinis, just trading things like this. This. They don't want to. I mean, you could have been up in here. That was a painful trade, but it hit target. I mean, if you sat through all of this and tried this trade, I mean, there you go. Did exactly what we said we wanted to do, then it's fine. But don't go try enter here. Rather wait for those opportunities. There's 2 opportunities that was presented to us today. I don't like this one, but this one. And trading should be as simple as this trade here. Shouldn't be complicated. I mean, I'm not saying don't mark out liquidity and all of that. That's the biggest job that you have to do, is to mark out liquidity and then trade from liquidity to liquidity. Okay, so now you want to see structure break here. There could be an entry in here. There's a protected high there. So you should not see price go above that. And if this was liquidity in this blue block, then you sell off to that. But because there's no context down here and we haven't hit that, and there's no equal lows that I've marked out or anything, I don't know if this is going to reverse. And this could quite easily inverse here and take that out and then form. And even if this candle close up here, you don't have to rush to take a long. You can wait for price to come back into a value area and then target, like we did here, target a swing point, form protected lows or protected swing points, and then trade it, because you've got all of this. There's a liquidity right here, and that's what you're going to target. And then you just take the trade, and then you manage it. Alrighty. that's about it for me at this AM session, everyone. Thanks for joining. Thanks for the thumbs up on this video. I hope you guys enjoyed it and obviously learned something here. And I'm going to be back at PM session for FOMC. I'm not coming gun blazing, try to trade it. I'm coming to see what market does. Maybe there's something to read from it, and you can join me. Yeah, thanks, and don't go over trade now. Maybe relax, and I'll see you guys in the PM session. Thanks again. Chat to you guys later. Thanks. Bye bye.